Hello everybody, what we're going to do in this latest video is take a look at the latest fortnightly investment outlook from one of my favourite market commentators, that is Tom Elliot, and we're going to try and summarise it in a very short space of time, hopefully 30 seconds to a minute. So the subjects that Tom is looking at is 1, market sentiment, 2, the Fed, 3, what he's calling the 2Ks, both on a political and market level, and 4, currency, sterling, dollar. Okay, so let's try and summarise this in 1 minute. Okay, 1, market sentiment. Rally, rally, rally has been the cry recently, hasn't it? All-time highs for the S&P 500 and the NASDAQ, and the first ever non-state controlled $2 trillion company in Apple. Absolutely phenomenal. What's driving it? Tom says the thing that's driving it is the fact that there's no return on anything else. So no return on cash, no return on bonds. Why would you sell out of equities? What's the biggest risk he sees? The biggest risk he sees is a delay to the creation of a vaccine. So he says that the market's anticipating a vaccine by spring 2021. Any delay to that could put a halt to this rally. 2, the Fed. We touched on this in an article that we did this week entitled Proof That the Market Rally Will Continue. They're continuing to be supportive, and they've said in the last sort of week or so that they're not going to panic and they're probably not going to be raising interest rates anytime soon. Comfortable with inflation going above 2% as long as it's in the short term. That is a bit of a change of stance, certainly the stance that we've seen in the last decade, and is supportive of risk assets. 3, the 2Ks. I'm going to have to let you look at the article on this one. It's sort of imagining graph paper with a K shape. Just have a read of it. 4, currency. Sterling. Where has sterling strength come from? Mid-June, sterling's at 124 against the dollar. This week, 134. Gain of 8% in a very, very short space of time, despite the fact that no new trade deals, looks like COVID's affecting the UK economy worse than the US, and a relatively large current account deficit remains in the UK. So what is causing it? Market might believe the Bank of England going to see a V-shaped recovery, probably more to do with the fact that we've got just unbelievable dollar weakness, and last week's speech didn't really help that. Certainly wasn't anticipated by Tom, wasn't anticipated by me either. Trying to predict currency is so difficult to get right. But that's a summary of his piece. Take a look at it below and let me know if you've got any questions. Have a great day.